It's a beautiful morning from this part of the world. Good morning, ladies and gentlemen. It's a beautiful morning from this part of the world. Good morning, ladies and gentlemen. It's a beautiful morning. Happy Friday. We are the last trading day of the week. So if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section to confirm that we are good to go. So I would like to see some feedbacks here. So if you really can see my screen and you can hear my voice, so I would like to see some comments, please. I would like to see some feedback. So let's see what we have here. Okay, good morning 809. Good morning, thank you. 7412 210 827. Okay, 916. Good morning, thank you very much for that confirmation. My Jermaine, okay, is it my Jermaine? All right, good morning, thank you. Hamirazin, good morning. All right. Oh, I see you, Carrie. Good morning. Thank you very much for that confirmation. 8603. Thank you. So I would like to take this as a positive feedback that we are good to go this morning. So it's a happy Friday, the last trading day of the week, and I'm so excited to welcome you to yet another promising session on the Extreme Speed. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, where we shall be evaluating the financial market together using technical parameters to identify trading opportunities lining up for us during the New York session today. So being the last trading day of the week, definitely we want to be doing some rounding off on all the pairs we have been monitoring since the beginning of the week. In the matter of fact, we have about 5 to 6 pairs that we have been monitoring since the beginning of this week. And I am very glad to let you know that we have been profitable in most of all these pairs. As price action, we started seeing some traction in our expectations as at Tuesday, Wednesday, Thursday, and until yesterday we saw some take profit target situation on some of these pairs, and we definitely are going to be looking at how these pairs went by. We are going to be doing a review, after which I will be advising you on how we are going to be locking in some profit, and what area do we want to be locking in some profit, what area do we want to be protecting our position against any sudden move that might likely go against us. And you know that it's peculiar with Fridays that majority in the market who had made some money through the course of the week will definitely want to be taking some profit after being part of a profitable trade, and this is likely going to be reflecting on the chart as price movement in the opposite direction of where price has been going since the beginning of the week. So we are going to be looking at these two as well, and I will be advising you accordingly. So try to stay tuned in through to the end of the session so that you don't miss out on any of these advices and ideas that I will be dishing out through the course of the session. So with that being said, let's dive into the market and let's see what is really going on in the market at those points in time. However, before we go into the charts, it's important that we look at the the economic calendar, as we have a couple of macroeconomic events coming up today. In fact, these are high impact event, and it is coming in the form of the almighty non-farm payroll, which will be coming up in the next 2 hours 30 minutes from now. And you know, from a technical standpoint, majority of participants in this market will definitely want to be looking forward to what is going to be coming up today, and we shall going to be seeing the reflection of the anticipation of this event reflected on the chart as price action. So we shall be looking at how we want to be preparing ourselves, how we want to position ourselves in such a way that we can catch any move that happens during the New York session today. And from the data we have here, looking at the previous data here, we have 2 to 3,000 jobs for the month of December, and we have a consensus of about 185,000, which is quite lower than the previous month. So we are going to be looking forward to see if we are going to be having something beyond expectation, below expectation, or probably the same thing as what we have as the consensus here. Then we also have the ISM services coming up in 5 hours from now, and there's some level of positivity in the air for that, as you can see, compared to the previous data, which is 49.6. we have a consensus of 50.4 right now, which is likely going to be a sign that we might be having something higher. So let's see how the market is going to be reacting to that. We shall be looking at in a moment. So with that being said, let's dive into the chart right now, and let's see what is really going on in the market at this point in time. Hello, sorry for the breaking transmission. I had to sort out some personal issues here, which has been sorted out. So let's go back into the chart right now. Let's see what is really going on at this point in time. And as usual, the first commodity we are going to be looking at this morning is the US oil. And we're going to be reviewing what has been happening here since the beginning of the week. So the week started on a bearish note, as we saw our price action broke down the $80 level, a very significant structure which we identified on the daily time frame. If time permits us, we shall be looking at the daily time frame one more time so that you can see what how important that structure is if we take it into consideration with the market structure. So the week started on a bearish note here, as we were able to join the breakdown of the $79 level. Remember, at the beginning of the week we had a resistance point here at the $80.50 level. Then we had the support level for the channel at the $79 area, and the signal we were looking forward to is either price breaks out of the channel to the upside to signal a bullish momentum, or price breaks down the support level of this channel at the $79 level to incite a bearish momentum. And in fact, the later is what happened here, as we saw the breakdown retest of the $79 level, which gave us an opportunity to join that decline to the downside. And in fact, price action moved about 230 pips in our favor before we saw this bullish momentum that began right above the $76.40 level. Then on Wednesday, we also had an opportunity, as we saw selling pressure around this area, and we were looking forward to two expectations here. The first one is, if bullish momentum continues here to the upside, we're going to be joining that bullish momentum. And in fact, we joined that bullish momentum, and it gave us about let's see how many pips was that. We had about 50-60 pips thereabout before this bearish momentum happened. And remember, we were expecting a breakdown of that structure to happen just in case the bullish momentum isn't strong enough. And this is exactly what happened here. We had our sell stop triggered at the $79 level to incite that bearish momentum to the downside, and price moved in our favor in that regard, as well as it moved about 260 pips in our favor before we started witnessing this consolidation phase around this area. And in fact, during the live session yesterday, we were around the structure here at the $76 area, where I said price action falling into this channel here between the $77.40 area and the $76.40 level could transition to either a reversal pattern or a trend continuation pattern. And what do I mean by that? So I laid emphasis on the fact that if price breaks out of the $77.40 level, we might likely be seeing a reversal pattern to the upside. Then we could join right above that $77.40 level. However, if price action breaks down the $76.40 level with selling pressure below the structure, it will be a beautiful signal for us to join a trend continuation pattern. And in fact, in the last 24 hours, we saw the breakdown of the $76.40 level. In fact, price action did a couple of retests of that structure to further give us a signal of a bearish momentum at that point. Though we joined the move to the downside there, and since price broke down, retest the $76.40 level in the last 24 hours, price has been caught within a consolidation phase. And at this point in time, if you are in that trade right below the $76.40 level, you will currently be running with about 40 pips in profit. Now that we are going into the New York session today, what is really going to be our plan? What are our expectations based on this current structure? Well, the first thing we observed here since the beginning of the week is the fact that price has been very bearish, and as a result of this, if we connect the series of lower highs here, you can see that we have a beautiful trend line which has been guiding this bearish momentum. As you can see, we had the first touch here, we had the second touch around the $80 level. Then on Wednesday, we saw a little consolidation phase right above the $79 area, evolving into a reversal pattern that finally broke down the $79 level, respecting that bearish trend line one more time to push price to the downside. And since price has tested the $75.60 level here since the New York session yesterday, we have been witnessing some buy pressure around that area, giving us a signal that buyers are likely negating all selling attempts to break the $75.60 level further to the downside. So with this kind of situation we have here, we have a little consolidation phase here, which is a beautiful signal that there is an indecision in this market. Hence, we want to be anticipating a breakout of the structure to either side to be able to take advantage of any trading opportunity during the New York session today. And what are we going to be looking forward to be part of this trading opportunity if we really want to be trading the US oil for today? Well, if we look at the structure here, we already have a channel which I've identified already, and that is the $76.40 level. As you can see, since the breakdown of the structure during the later part of the New York session yesterday, we have been witnessing some rejection of that area, giving us a sign that there is some selling pressure around that area. And also we have the support level for this channel sitting around the $75.60 level, where we have been witnessing some buy pressure coming in from that level. So for those who are taking advantage of this bearish momentum here during the course of yesterday's trading session, I would advise you to move your stop loss to break even right now, as anything could actually happen from this point. And if we take into consideration the buy pressure we have been witnessing right above the $75.60 level, as you can see, sellers are unable to break down the structure in the last 24 hours. It's a beautiful signal that we might be having a bullish momentum going forward. So how do we intend to trade this as we head on into the New York session? Well, the first thing I will say here is that you all know that from a technical standpoint, whenever we have a channel like this, all we want to be doing is to remain patient and wait out for either a breakout of the channel or breakdown of that channel to give us that signal that we are looking forward to. So during the New York session today, we want to be seeing either a breakout of the $76.40 level to give us a signal of a possible bullish momentum at this point. And if a breakout of the $76.40 level happens and price action continues to the upside, there are key levels here we want to be taken into consideration while we guide our position accordingly as we continue to monitor price action. And one of the structure is the $77.40 level. Remember how this level has been a major determinant of price action during the course of this week. We saw the breakdown of the structure here. We saw some selling pressure around this area, and if price breaks out of the $76.40 level with buy pressure above that level and price action continues to the upside, as soon as it tests the $77.40 area, we want to be moving our stop loss accordingly to lock in some profit. And the reason why we are going to be moving our stop loss is simply because of the fact that we need to understand what is really going on around the $77.40 level. We want to see how price action will be reacting to that structure to decide if we are going to be adding more position to our existing buy position, or we might be getting ready to join a decline from that level. And if you look at that structure critically at the $77.40, you can see that it shares a beautiful confluence with the bearish trend line that we identified earlier to be a critical confluence we need to look out for if price action ever breaks out of the $76.40 level. So if a breakout of the structure at the $77.40 level happens, followed by buying pressure above that level, we shall definitely be looking out for buying opportunities to add more position to our existing trade. So that is what we are going to be looking forward to buy the US oil. However, if price action drops further to the downside, breaking down the $75.60 level, that will be a beautiful signal that the sellers have come to stay here as they take out all the buy position around this area, gather some liquidity, which we shall be seeing as selling pressure right below the structure for us to be adding more position to our existing trade. So we have a simple setup here which we can use to guide our trading activity for today. So for those, I told you, for those who are taking advantage of the sell position right below the $76.40 level, kindly move your stop loss accordingly, lock in some profit. And I have advised that we move our stop loss to our entry point here at the $76.40 level while we continue to monitor price action, waiting for that signal to happen, which is definitely going to come in the form of either a breakout of this channel to the upside or a breakdown of this channel to the downside for us to either buy or sell the US oil for today. So that is my view here on the US oil. It's quite a simple setup, so I hope that you screenshot my screen so that you can use them as a reference point when you are about to make your individual decision on this pair. If you have any questions regarding what I just explained so far, you need further clarity into a particular aspect, feel free to drop your inquiries in the comment section, and be rest assured that I will be willing to be of help in that regard. So with that being said, here I will be moving on to the next option, and be rest assured that I will be checking in the comment section from time to time to see if there are any questions for me or any inquiries for me whatsoever it is. Okay, so the next pair we are going to be looking at this morning is the US tech, and in fact we have been monitoring this pair since the beginning of the week, and we have been very profitable on the US tech. And at this point I would probably consider the US tech as our trade for the week, as we were able to make quite a lot of money on the US tech. Remember, the week started with a bearish momentum here after we identified a channel around the 12,200 where the resistance point is. Then we had a support level at the $12,100 level, and what we were looking out for is either a breakout of the resistance point here to join a rally to the upside, or a breakdown of the support level to join a decline. And in fact, we saw the breakdown retest of the structure on Monday stroke Tuesday here, as we were able to join this bearish move to the downside as price action moved about, let's see, about 270 pips on our first position, and the second position moved about over 240 pips in our direction before we started witnessing this buy pressure that came in around the $11,800 level. Though I missed this move anyways, I missed this move. We saw the breakout of the structure to the upside, and then on Wednesday morning when we came in here during the live session, we were able to identify another consolidation phase right within the 12,100, which was initially the support level for this week. As you can see, it now turned out to be a resistance point on that Wednesday here. As you can see, selling pressure continued to negate all buyers' attempt to break out of that structure. Then we also had a support level of the channel here sitting around the $12,030 level, where we are looking out for a signal to join either a bullish momentum or a bearish momentum at this point. So we were looking forward to either a breakout of the structure to the upside or a breakdown of this level to the downside. And in fact, during the later part of the New York session on Wednesday, we saw the breakout of the structure, which gave us that massive move that you can see on your screen right now, as price action moved significantly well in our favor, giving us about till this moment, if you are still in this trade, you will currently be over 490 pips in profit. Then we had the second position here right above the 12,200. Remember, that was our resistance point for this week, and we saw another breakout of that structure there, triggering our buy stop order right above this level, and that also is running with close to 400 pips in profit. Now, during the live session yesterday, we were around this point, around the $12,500 level, where I told you that for those who had missed out on this opportunity, that the market is likely going to be giving us another chance to join this rally, and for those who are still in this trade, we will definitely be having an opportunity to add more position. And what we were looking out for yesterday was this: we were able to identify a simple structure which we said we shall be using to guide our trading activities. And what are the structures? The first one is the $12,500 level here, a very strong psychological level considering the round figure of that price. Then we also have this trend line here, which we said we shall be using in conjunction with the $12,500 level to give us an opportunity to join the rally or get ready for a bearish momentum. And how did we say we are going to be using that structure? Well, we saw the breakout of the structure here during the live session, and we said we need to be patient, as this breakout could likely turn out to be a false breakout. So we really want to see some confirmations that this breakout is a true one. And I told you that we should be looking out for price coming back to do a retest of the 12,500, and if we scale down to our lower time frame, we want to be seeing buying pressure right above the structure for us to join or add more position to our existing trade. And in fact, this is exactly what happened here, as we saw the price comes back to do a retest of the 12,500, followed by buying pressure on our lower time frame, and it was a beautiful opportunity for us to join that rally to the upside. And for those who are taking advantage of that move, very well done to you guys, as price action moved. How many pips was that? It moved about 370 pips in our favor, and if we had that to the previous one that we had over 500 pips, we are having close to 1,000 pips at least for this week on this US tech. So that is why I have said the US tech can be considered as the most profitable trade on our list for this week. Now that we are going into the New York session today, what is really going to be our plan? How do we expect to trade the US tech for today? Are we going to continue to buy the US tech, or should we be getting ready to join a decline to the downside, which might likely be a retracement of that previous impulse leg that we have been witnessing here in the last 48 hours? So before we go into the details of what our expectations are for today, I would like us to scale up to the daily time frame. Let's have an holistic view of what is really going on in this market at this point before coming back down here to make a decision for today. Now, if we scale up into the daily time frame here, what can we see here? Well, I would like to take us back to the beginning of last year here, first of all, so that we can see how price action has been playing out prior to this present moment. And in fact, throughout the course of last year, price action has been bearish, and as a result of this, we were able to connect the series of lower highs here, which has given us this resultant bearish trend line, which has been guiding this bearish momentum throughout the course of last year. However, as soon as price got into the $11,000 area here, since the month of June last year, we begin to see some buy pressure, and as a result of this, we had the $11,000 level as our key level for this year. As we said, anything right above the $11,000 level will be giving us an opportunity to buy. And at the beginning of the year, we saw this structure here which transitioned into a double bottom structure, and we looked out for the breakout retest of the 11,100, and we were lucky enough to be part of this buy position as we took advantage of this move to the upside, and we rode the move all the way up, and this had led to the breakout of this bearish trend line, a trend line which has been holding bearish momentum for the last 13 to 14 months now. So a breakout of that trend line is a significant signal that the trend line is no longer strong enough to hold bearish momentum anymore. And what we saw here is the fact that price, after breaking out of that trend line, price action has continued to find higher highs and higher lows at this point. So at this point in time, this is where we are right now, as we are currently trading right around the $12,620 level, which is around this area. So going into the New York session today, what is really going to be our plans? What are our expectations based on this current structure? Now, first of all, we need to take into consideration the $12,100 level. This level has been a strong selling niche for 3 months now. I think November, December, January, 3-4 months now. The $12,100 level had been a strong selling niche in this market, and in fact, a couple of days ago we saw the significant breakout of that structure with a bullish engulfing candle to emphasize the strength of the buyers at this point, taking out all the sell positions around this area to push price to the upside at this point. And if we look at the nature of the candle that closed yesterday, we can see that we have something that looks like a shooting star candle, which is a beautiful sign that there is some selling pressure around this area. And this is not a surprise for us, as we all know that from a technical standpoint, whenever we have a major move like this, like a bullish momentum, at one point in time, those who are taking advantage of this opportunity right above the 11,700 or probably the 11,100 area will likely want to be taking some profit, at least in the meantime, and this will definitely be reflecting on the chart as a retracement of that previous impulse leg. So we might likely see price retrace back into the 12,100, 11,950, 11,700, or even go as far as the 11,500 level, which shares a conference with the bearish trend line that was broken earlier to incite another wave of bullish momentum. That is one scenario we want to be looking forward to, if that is going to be the case, and that is as a result of citing this shooting star candle at this point. Another thing we could also look forward to is if we have a trend continuation pattern somewhere around the $12,600 level, and this might likely incite a breakout retest of structure if we have any structure around that area on our lower time frame to join another wave of bullish momentum. So in that regard, and for us to have a better perspective into what is really going on around the 12,600 and the 12,650 area, we would definitely want to be going back to our 1 hour time frame to have a better look into what is going on there. Then we use the structure around that area to decide what our next line of action will be. And then before we go down into the 1 hour time frame, if we zoom out a little bit and compare the current structure with what has been happening around here in the past, you would notice since March last year, this level also has been a major determinant of price action. So if I bring out my line chart here and try to connect these points together, that is somewhere around the 12,800, which is also a strong psychological level. We should be having something like this. We have the $12,800 level here, so let's label it for the sake of clarity. So we have the $12,800 level, a beautiful psychological level there. You will see how that level has been a major determinant of price action. Look at what happened here in the month of March. We saw some buy pressure above that level. We saw a little buy pressure in the month of April before the breakdown retest of the structure happened in the month of May. Another breakout of the 12,800 happened in the month of August, then a breakdown to the downside later on, retest of structure, and since the month of August, price has been trading below the $12,800 level. And during the course of yesterday's trading session, we saw the sharp rejection of that 12,800, a beautiful sign emphasizing the strength of the sellers at this point. So is this 12,800 level going to be a strong selling niche? We might not know if this is going to be so for today. It might likely be next week before we start seeing structures forming around that area to give us further signal. But what we are going to be looking forward to here is to see what is really going on here on our lower time frame, to see if price might likely come here again one more time to reject it before it crashes to the downside, or it might likely lead to the breakout of the 12,800 to incite another wave of bullish momentum. So let's scale back down to the 1 hour time frame and let's see what is really going on there. So if we scale back to the 1 hour time frame and look at what we have around the 12,650, which we identified earlier on the daily time frame, this is what we have here. We saw a breakout of the structure during the later part of the New York session yesterday. Price dropped back below the structure during the early hours of today to emphasize some importance to that structure. And since the breakdown of the structure during the early hours of today, price action has continued to trade below the 12,650 level to emphasize some level of selling activities going on at this point. And I will characterize the selling activities as a profit-taking activity. Remember, we have this impulsive move that started a couple of days ago here, right from the 12,030 to the upside, and we might likely be seeing a retracement of that impulse leg probably into our golden zone area before another wave of bullish momentum will happen. So the first thing I would like to do here is that we should position ourselves in such a way that we can catch that bearish move, that counter trend opportunity, if that is what is going to be happening today. So to do that right now, I will bring out my Fibonacci retracement tool, run it through the previous impulse leg here, and what we shall be doing is to identify an area between the 50 and the 78.6% area as a potential TP target for any selling opportunity at this point, where we shall be looking out for potential buying opportunity also around that area. So we have a maxing out at the 12,200 here. So we might have a situation, remember we have this bullish trend line which we identified yesterday. So So if we have a breakdown of this bullish trend line with selling pressure below the structure, we might want to be joining a bearish momentum to the downside. And look at what we have here. The zone here also shares a beautiful confluence with a resistance point we identified at the beginning of the week. And from a technical standpoint, whenever we have a breakout of a structure like this, there is a tendency that price might likely come back to do a retest of that structure in anticipation of another wave of bullish momentum. So let's see how price action is going to be reacting to this trend line here, as this is going to be the structure we shall be using to guide trading activity for today. And for us to have a more simple setup for the highs to see here, I will be identifying something here at the 12,050. This will make things a little bit easy for us to be able to catch that move early if price action ever breaks down that structure. So you can see the $12,550 level shares a beautiful confluence with that trend line here, as you can see here. Then we have some buy pressure around this area. We saw some selling niche here on Thursday before the breakout of the structure happened. So if price action breaks down to 12,550 level, selling pressure below the structure, we shall be looking out for selling opportunities to the downside. Please note that this is a counter trend opportunity, and if you are not comfortable taking counter trend trades, or you are not a scalper, I would advise you to hold on and wait out and see how far this retracement phase is going to be going, and anticipate a buy position at the end of the retracement phase. So we already have a zone here. So you have between 110 pips to a maximum of about 320 or 350 pips to catch here if we finally have the breakdown of the 12,550. So that is one scenario that we shall be looking forward to. So we look out for selling opportunities below the 12,550 to be part of the sell trade here. However, if price continues to the upside instead, and price does not drop further to the downside but instead continues to find higher highs, then a breakout retest of the 12,650 level should be a beautiful opportunity to join that rally to the upside. And if a further breakout of the 12,900 happens, I have a structure here. Hold on a second, let's relabel this. We have 12,900. So if a breakout of that structure happens now, we want to be adding more position to our existing trade. So let's see how this plays out during the New York session today. And for those who are already in this buy position since Wednesday here, kindly move your stop loss to somewhere right below the 12,500 as we protect and secure our position against any sudden pullback that might likely happen at this point. So move your stop loss accordingly if you are still in a buy position, and if you are not in any position right now, let's anticipate either the breakdown of the 12,550 level for selling opportunities or the breakout of the 12,650 for buying opportunities. You may want to screenshot my screen so that you can use them as a reference point when you're about to make your individual decision during the New York session today. So that is that on the US tech. If you have any questions, feel free to drop your inquiries in the comment section, and be rest assured that I will be taking my time to read through and see if there are any inquiries in that regard. So let me take the next 10 to 15 seconds to read through the charts and see if there are any comments before we move on to the next pair. So in the absence of no questions, I want to assume that we're on the same page on this one. So let's run through the next pair. And the next pair we are going to be looking at this morning is the GBPUSD. And in fact, the GBPUSD was quite a profitable trade for us yesterday, and even since the beginning of the week. Let's see what has been going on here since the beginning of the week. So if you look at the current structure we have here, at least in the last 5 days, you will see that we have been bearish on the GBPUSD, and in fact we were part of the first sell position as soon as price broke down the 1.23800 level, a level which also shares a beautiful confluence with that bullish trend line that has been guiding bullish momentum since the beginning of this year. And remember, we identified this channel initially at the beginning of the week, and that was between the 1.2400 level and the 1.23800 area, where we said either a breakout or breakdown of the channel will definitely be giving us that opportunity to buy or sell the GBPUSD. And in fact, we saw the breakdown retest here on Monday, which we took advantage of, and then we also added another sell position at a breakdown retest of the 1.23400 level. So price action moved about 80-90 pips for our first position, and about let's see, 40-50 pips on our second position before we saw this consolidation phase that lasted about 24 hours, where we said we shall be positioning ourselves to either buy or sell if a breakout retest of the structure happen. So we moved our stop loss for our sell position into somewhere right about the 1.234. So we really didn't have any significant profit on that one, and we were taken out of that position right above the 1.23400 level after we cited this buy opportunity, which we also took advantage of, rode the move all the way up into the 1.23980 level with about 60 pips thereabouts before we started seeing another incitation of selling pressure right below the 1.2400 level. And at the same time, the selling pressure also shares a beautiful confluence with that bearish trend line that we identified here at the beginning of the week. And we also said if this selling pressure continues around this area, we shall be looking out for a breakdown retest of the 1.23800 level to join another wave of bearish momentum to the downside. And we joined this on Wednesday, and during the live session yesterday we were around this point here at the 1.234 level, where I said everyone who is in this trade should move their stop loss accordingly, and let's remain patient here as we want to see how price action will be reacting to this trend line to decide if we are going to be adding more position to our sell position, or we shall be getting ready to join a bullish momentum. Though we had some volatility happen around this area following the macroeconomic event, and we positioned ourselves in such a way that we joined the breakdown of this bullish trend line, and we had the breakdown retest of this trend line around the 1.23100 level yesterday for price to move in our favor with over 120 pips in profit. And for those who have been part of this move, kudos to you for being on standby to catch this move as price action moves significantly well in our favor. So right now, if you are still in this trade, well, I would advise you that you should be getting out from this trade at this point in time, and the reason is simply because of the recent buy pressure we have been noticing around this area. So we want to see how price action will be reacting to the 1.22500 level to decide if we are going to be adding more position to our sell position here, or we might likely be getting ready to join a counter trend opportunity in the form of a buy position. So whatever happens between the 1.22500 level here in the next 30 minutes will be deciding what our next line of action will be. And one thing I also want us to take note and remember is the fact that we have a major macroeconomic event coming up today, and that is the non-farm payroll, which definitely majority in this market will be anticipating for better information on what the next line of action will be. Now, before we go further here, I would like us to look at things from a more holistic perspective. So let's look at the 4 hours time frame here to see what is really going on around this area. So in the last 2 weeks now, we have seen a situation here where price has been caught within a channel around the 1.24500 level and the demand zone at around the 1.22500 area here to form a beautiful flat channel, which further emphasizes the indecision in this market. And you know, from a technical standpoint, whenever we have a flat channel like this, all we want to be doing is to wait out for either a breakdown or breakout of this channel to give us a signal of what our next line of action will be. And in fact, we saw the breakdown of the structure here during the course of the New York session yesterday to give us a little hint into the possibilities of some selling pressure coming in here. And in addition to the breakdown of the 1.22500 is the breakdown of this bullish trend line, which we identify here, that has been holding bullish momentum since the beginning of the year. Remember, we have this bullish trend line which has been holding the bullish momentum since the beginning of the year. We saw the breakdown of that structure here during the beginning of this week, which we actually took advantage of. We saw price action come back to do a retest of that level, and this bearish momentum has led to the breakdown of the 1.22500, a level which has been holding bullish momentum here in the last couple of weeks. So we want to see how price action will react to the 1.22500 level here to decide what our next line of action will be. And to make things more clearer here, we have this bullish trend line which we have since the beginning of the week. It's a temporary bullish trend line which was broken yesterday. And from a technical standpoint, whenever we have a breakdown of structure, we might see a situation where price comes back to do a retest of that level in anticipation of another wave of bearish momentum. Now, with this scenario in view, I would like to extend this a little further into the future, as this is going to be one of the parameters we shall be using to guide trading activity today if price action breaks above the 1.22500 level. So if price action breaks above the 1.22500 level here, we might likely see a situation where price comes back into the structure here, a structure which also shares a confluence with the 1.23400 level. And if we start seeing selling pressure, retest of that bullish trend line, selling followed by selling pressure on our lower time frame, then we might likely be ready to join another wave of bearish momentum at this point. And if you are a scalper or a counter trend trader, well, a breakout retest of the 1.22500 could give a trading opportunity, and you have your take profit target around this area. And taking into consideration the fact that this is a counter trend opportunity, that is, if price breaks out of the 1.22500, it is a counter trend opportunity, and as long as price moves in our favor, kindly move your stop loss accordingly. We have structures here to guide us. We have a structure here at the 1.231. We also have a structure here at the 1.22700, 22780. Let me relabel this, 22780. Okay, so we have a structure here at the 1.22780 to guide our trading activity during the New York session today. That is if price breaks out, retest the 1.22500. So if price gets into the structure, you move your stop loss accordingly. If it gets here, you move your stop loss accordingly, and you could have your TP target around this area. So if you are not a counter trend trader, you're not a scalper, I would suggest that even if price breaks out of the 1.22500, let's hold on for price action to grow further into an area where we start seeing reversal patterns or selling pressure to join the second wave of bearish momentum here. And we might likely see a sharp rejection of the structure here during the NFP today, probably price sharp rejection before that massive move to the downside happens. So let's be on standby to be part of this opportunity as we continue to monitor price action. If you have any questions, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we are going to be looking at is the XAUUSD, which is the gold. And on the gold yesterday, it was a very profitable trade for us on the gold here yesterday as well. So what did we see here yesterday that made us to sell? Remember, we identified this channel here between the 1957 and the 1950 level here, which was a very beautiful flat channel where I said a breakout or breakdown of this channel will be giving us a signal of where price action will be going. Remember, we bought this move right above the 1935 level here, and we moved our stop loss somewhere below the 1950 after catching about 1,500 pips on the buy position we took here on Wednesday. And during the live session yesterday, we were looking forward to either a breakout of the structure or a breakdown of this level to join that rally or decline at this point. And in fact, during the New York session yesterday, I think a couple of hours into the New York session, we finally saw the breakdown of the 1950 level, which triggered our sell stop order. And one thing I told you during the live session yesterday is that we want to continue to monitor price action, and I said if price action gets into this bullish trend line, we want to be moving our stop loss to the entry point here, secure our position, and wait out and see what happens around this area on our lower time frame to decide if we are going to be adding more position. And in fact, on the 5 minutes time frame, we saw the breakdown retest of the 1944, giving us another beautiful opportunity to add more position to our existing trade. So yesterday we had two positions on the XAUUSD as price action moved significantly well in our favor to take profit at the 1912 level here, sorry, 1920. And we had 3,000 on the first position, and on the second position we had about 2,200 pips. So we had over 5,000 pips on the XAUUSD. So congrats to those who have been part of this trade, and kudos to you for being part of this trade and being on standby to take advantage of that move. And remember, during the live session yesterday, we also identified the 1920 level where I said we want to see how price action will be reacting to that structure to decide if we are going to be adding more position to our existing trade, or we are going to be getting ready to join a rally to the upside. And in fact, we saw the breakdown retest of the 1920, which also gave us an opportunity to sell right below that structure. And if you had also did that at that point, kudos to you, as you will currently be running with about 900 to about 1,000 pips in profit at this point. So if you are still in the sell position here on the XAUUSD, my advice at this point is that we want to be moving our stop loss to somewhere below the 1920 level here to lock in some profit as we continue to monitor price action. Now, going into the New York session today, what is going to be our plan? How do we intend to take advantage of this trading opportunity during the New York session today? And also remember that we have a macroeconomic event coming up today, and this is definitely going to be affecting the gold here. And what are we going to be looking out for? How are we going to be positioning ourselves so that we can catch this move when it happens? So the first thing I'll be doing here is to take into consideration the current structure we have here. Hold on a second, let me do this quickly. So we have something right here around the 1918 level. Let me label that area first of all. Let me put this at the middle so that we can see things clearly here. So if you look at the current structure we have here, you will notice that I want to place it at the top hand side. You would notice that as soon as price tested the 1912 level, we have been witnessing buy pressure from that level. So that is one setup here. So we have a support level already figured out at this point. Then we also have a resistance point around the 1918 level here, where every attempt by the buyers to break above this level has been met with strong resistance from the sellers. So we have a beautiful channel between the 1918 and the 1912 level, which emphasize the indecision that has gripped this market. And it's very obvious that participants are looking forward to the macroeconomic event coming up today, and as a result of this, they will step aside waiting for an informed decision on where the next line of action will be. And one thing we want to be doing in this community is that we want to be positioning ourselves in such a way that we can catch that move when it happens. So whenever we have a structure like this, you all know what we're looking out for. We're looking looking out for either a breakout or breakdown of this channel to give us an opportunity to either buy or sell. So if we are going to be selling the XAUUSD here, we want to see price break down the 1912, probably with selling pressure resume below the structure on our lower time frame. Then we could actually sell the XAUUSD or add more position if you are still in this trade. However, if price action breaks out, retest the 1918 level, then it could be a very beautiful opportunity to join a counter trend opportunity, with the hopes that price action will be going back into the 1950 level. And the reason why I'm choosing the 1950 level is simply because it has a structure with the bullish trend line that has been guiding bullish momentum since the beginning of the year. So we might likely see price come back to do a retest of that trend line. Remember, the trend line was broken yesterday, so we might likely see price come back to do a retest of that structure in anticipation of another wave of bearish momentum. So my hope is that we'll be on standby to catch either of these opportunities when they happen. So it's a very simple setup here. We have a channel between the 1918 and the 1912, where a breakdown retest of the structure will be a beautiful signal for us to join the potential rally or decline at this point. If you have any questions regarding what I just explained, feel free to drop your inquiries in the comment section of this video. Now, moving on to the next pair, I think that will be the last pair for today, I guess. Yes, that's the EURJPY. So we were taken out of our buy position yesterday. Remember, we had a buy position running during the live session yesterday, and that was we took advantage of a buy position right above the 141.00 level, and we were looking forward to adding more position at the breakout of the 141.600. And I told you that we are going to be moving our stop loss to lock in some profit, as we might likely have selling pressure come in. And if you notice what has been happening around the 141.600 level since the beginning of the week, we have been seeing selling pressure from that level. And at the same time, we have a support level also for this week at the 140.800. And if you remember vividly, I told you that I wouldn't be selling the EURJPY unless price action breaks down both this bullish trend line. Remember, we have this bullish trend line which price action has been respecting since the beginning of the week, that if price does not break down, I wouldn't be selling. So I wanted to see a breakdown of the 141 or the 140.800 for us to join that decline to the downside, and this is exactly what happened. We saw the breakdown of the 141. If you have taken advantage of that move at that point, kudos to you for being on standby. And if you had missed that one, we had the breakdown of the 140.800, which triggered the second position. So we have currently running with about 60 on the first position, and then the second position is running with about 37 pips in profit at this point. So for those who have been part of this trade, kudos to you for being on standby to catch that move. And now that we are going into the New York session today, what is going to be our plan? Are we going to be buying the EURJPY or are we going to be selling? So for me, despite the fact that I have been noticing buy pressure around the 140.100 level, I have decided not to be thinking of buying at this point. And the reason why I negated any buying attempts here is simply because when I look for and see what has been happening here in the last couple of weeks, you would notice that price action has been very, very bearish, and coupled with the breakdown of the trend line here, it's a good sign that sellers are still very, very strong in this market. So with the breakdown of that structure, which transitioned into this impulsive bearish leg that you can see here, the bullish momentum we are noticing here in the last couple of hours might likely be a retracement of that impulse leg. And remember, we have this bullish trend line here, which price might likely come back to that structure to retest that level in anticipation of another wave wave of bearish momentum to the downside. So because of this view here, I'm not thinking of buying at this point, but to wait for this retracement to culminate, where I will be looking out for reversal pattern. It could come in the form of a double top structure, head and shoulder pattern, or a rising wedge, where I want to be looking out for a breakdown retest on my lower time frame. Then I could join that decline to the downside. So for the EURJPY for today, I will continue to look out for selling opportunities here, and if price does not climb up, that is if price does not climb up into the structure but instead drops below the 140.100, then that will also be a good opportunity to add more position to my existing trade here. So these are the views I'm looking forward to at this point. So I'm looking out for selling opportunities. So I have a structure here at the 140.800, that is one. Then I have a structure here at the bullish trend line here to sell. So we have 1, we have 2, then I have 3 here at the 140.00 level to sell the EURJPY for today. So these are my views on the EURJPY, and if you have questions, feel free to drop your inquiries in the comment section. So this is what I'm going to be doing for today, and before I drop the curtain, let's quickly do a recap of what we talked about today so far, for the sake of those who are not part of the beginning of the session. So the first commodity we talked about today is the US oil, and remember, we have been selling the US oil since the beginning of the week. In fact, we have a position running at this particular point in time, and I told you to move your stop loss to break even. So for those who had added another position right below the $76.40, I have told you to move your stop loss to the $76.40 level as we continue to monitor price action. And for today's trading session, we already identified a beautiful channel between the $76.40 level and the $75.60 area, where a breakout of that structure will be giving us an opportunity to buy, and a breakdown of that structure here will be giving us an opportunity to add more position to our existing trade. So that is my view here on the US oil. Then we went on to talk about the US tech here, and on the US tech we also have a simple setup which we are going to be using to guide trading activity. And remember, the US tech is one of our profitable trade for this week. We started the week on a bearish note where we took advantage of the breakdown of the 12,100 here. We saw a retest here also, which we took advantage of, and price action gave us about 260 pips on the first position and about 210 pips on the second position at that point. Then we saw this bullish momentum which we were wary of buying, as we know that price has been bearish since the beginning of the week, and lucky enough for us, we saw this setup here, a beautiful channel between the $12,030 level and the $12,100 area, where we said on Wednesday that we want to be looking out for either a breakdown or a breakout of that channel to either buy or sell. And we saw the breakout of the 12,100 later on Wednesday, and it was another good opportunity to join that rally to the upside as price action moved over 400 pips to hit my TP target at the 12,500. Then we also had a second position at the breakout of the 12,200 to give about 300 pips. Now going into the New York session today, we have a simple setup which we shall be using to guide our trading activity. And what are the setups? So for selling opportunities here, I told you that if we consider this impulsive move to the upside, you would agree that a retracement is long overdue at this point, as we might likely see price do some retracement back into the structure that was broken out of before another wave of bullish momentum will happen. And to position ourselves just in case that retracement phase happens, we already have a structure here at the $12,550 level, which also shares a beautiful confluence with our trend line. So what we want to be looking out for to sell the US tech is to see price break down the 12,550 level with selling pressure below the structure. Then we could actually join that decline to the downside with a take profit target just right there around the 12,450 and the $12,200 level. And if that is going to be the case here, I told you that we shall be anticipating some buy pressure around this area to join another wave of bullish momentum. So that is what we are going to be looking forward to if selling opportunity will be coming in on the US tech for today. Then the other scenario that we identified here for buying opportunity is if price breaks out of the channel to the upside, that is a breakout of the 12,650 level, retest of structure, then we want to be buying the US tech. And if a further breakout of the 12,900 level happens, we will definitely be thinking of adding more position to our existing trade. And please remember, for those who are still in the buy position that we took advantage of here on Wednesday, I have told you to move your stop loss to somewhere right around the 12,500 while we continue to monitor price action. So I wish you best of luck on this one. Munch my screen if you can, so that you can use it as a reference point when you're about to make your individual decision during the New York session today. Then we went on to talk about the GBPUSD for today, and on the GBPUSD we are in a profitable position. As you remember, we have been part of the sell momentum right below the 1.23800, and we have rode the move all the way to the downside here, and I told you to move your stop loss accordingly to lock in some profit at this point, as we want to see how price action will be reacting to the 1.22500 level to decide if we are going to be adding more position to our existing sell position. However, if price action breaks out of the 1.22500 level, I have told you that this might likely be a retracement phase of this impulse leg that we have here, and we might likely be looking out for selling opportunities at either the 1.22780, 1.23100 or the 1.23400 level. What we want to be looking out for in the structures are selling pressure on our lower time frame. If you start seeing rejection of the structures here on our lower time frame, giving us a clue into possible selling momentum, then we want to be joining a decline from that level. So if you are a counter trend trader, I told you that you might want to be taking advantage of a breakout retest of the 1.22500 to the upside. But if you are not, please stay out of this trade and wait out for that retracement phase to end before you want to be joining that decline. Then I told you that we are still looking forward to see how price will react to the 1.22500. So what happens here if price does not go to the upside, but instead it drops to the downside? If it drops, then we want to be seeing selling pressure below the 1.22500 level on our lower time frame. It could be your 10 minutes, your 5 minutes time frame. We look out for selling pressure below that level, breakout retest of structure, then we want to be adding more position to our existing trade. So these are my views here on the GBPUSD. I hope you screenshotted my screen, and so you can use it as a reference point when you're about to make your individual decision. I can see a comment here from Julian Ahmad. Ahmad is asking, is US Tech won't reach 11,700? Let me look at what you're talking about there. Where's 11,700? 11,700 is just too far away. That's this area here. I'm not sure. This is where we are looking forward to. If price breaks down the 12,550, we are looking at a TP target within the zone here, at least in the meantime for today. And if a further breakdown happens, I'm not sure this will be happening today, we might likely be thinking of adding more position to the sell position there. But if that does not happen for today, I don't think price will pass the 12,200, even if a breakdown of the 12,550 happens at this point. So let's see how price action plays before that point. Okay, let's take it at a step at a time. All right, so we're moving on to the XAUUSD here, and on the XAUUSD we have been very profitable since the beginning of the week, as we have been joining some buying and sell. We sold at the beginning of the week right below the 1,925 here, we bought above the 1,935 here, and we sold yesterday below the 1,950 here, which gave us a massive 3,000 over 4,000 pips, because we had two positions on this one. And during the live session yesterday, we've identified a simple setup here between the 1,918 and the 1,912 level, which is a beautiful flat channel, where we said we shall be looking forward to either a breakout or breakdown of this channel to give us an opportunity to trade. And in fact, it appears we already have a breakdown of the 1912 level, and I hope your position is triggered at this point. And let's see how far this move is going to go. So let's continue to guide our bearish momentum here as we have a sell position triggered already. At this point, I will suggest that you have your TP target around the $1,900 level. Let's see how price action reacts to that structure to decide if we are going to be adding more position to our existing trade. And one thing I would like you to note here, that even though we are having a sell position running right now, please, if price action move at least into the 1907 level, kindly move your stop loss to break even, lock in some profit at the 1912 as we continue to look out for more opportunities to add more position. This breakdown here could turn out to be a false one, so that is why I said if price action moves to somewhere around the 1907 here, move your stop loss to break even, lock in some profit, and let's see if price will continue to go to the downside. And if price breaks back up, then above the 1918 is going to be a beautiful opportunity to join a rally to the upside. So let's keep this in mind while we continue to monitor price action. Then we moved on to talk about the EURJPY, which is the last pair we are going to be talking about for today. And we had a sell position triggered yesterday right below the 141.00 level. Then we added another position below the 140.800 level as price action continued to go to the downside. And one thing I stated here is, despite the fact that I'm noticing some buy pressure around this area, which looks like it's transitioning into a reversal pattern, I am going to be very mindful of buying at this point. And the reason why I'm not thinking of buying the EURJPY is simply because of the breakdown of this bullish trend line that happened here, which was very, very significant, and there is a likelihood that price will come back into the structure to retest it to incite another wave of bearish momentum. So that is the reason why I'm not going to be buying at this point. I want to see how price action will react to the 140.800 or this trend line here to decide if I am going to be selling from this level or from this level. And if price does not go to that far, that is, price does not climb up but instead it drops further to the downside, well, that will be a beautiful signal for me to add more position below the 140.800 level. So on this note, I would like to call it a day here. It has been a wonderful moment with you guys, and I hope I was able to simulate all the possible scenarios that is likely going to be happening during the New York session today. Kindly ensure that you have moved your stop loss accordingly on all your current positions right now to protect your position against any sudden pullback that might likely happen during the macroeconomic event for today. So, and let's be on standby for the structures that we were able to identify during the live session today. So on this note, I wish you best of luck during the New York session today, and I look forward to seeing you same time next week, Monday, 10 a.m. UTC, 11 a.m. West African time, as we come back here to get ourselves prepared for the new week. Thank you very much once again, and I wish you best of luck today and a wonderful and beautiful weekend. Bye bye.